Hello, trading is closed on November 12th, 2024. We'll go over our calls. Well, let's start with our disclaimer, I should say. Go over our calls and then make our predictions. This is my trading plan for tomorrow, which is Wednesday, November 13th, 2024. Please remember I can be completely wrong. Any trade you make should be made at your own risk. I use many different systems, one of which is my MEJT system. That system calls targets. It doesn't give an entry, and that's why it has to be used in conjunction with other systems. We looked for the pattern today with the early low. I'm going to try to prove to you that's what this is, even though it sure doesn't look it when you first look at this. This looks just like the pattern with the early high, but I'll tell you why that's not what I'm calling it. We had some targets. I wasn't certain they were going to print, but they did. We had 59.93.52. That printed right here, support resistance area. We had the ultimate target 59.86.68. That printed. And we have a new target from today's patterns, 59.65.09. I mean, it'll probably print. I'm just going to say increased risk of failure because where we are in the wave count. If you're ever going to have failures of these targets, it's when you're making it. It's either when you're hitting new highs or lows for the leg, or else when you're having a strong impulsive move. I think we're in a strong impulsive move, so the risk of failure goes up. It'll probably print, and if it does, there'll be support under it. And I'd love to see 59.13.84, although I'm not looking for it tomorrow. I'd like to see those print, but we have a wave count. It says we're in a wave 3 up of multiple degree. I'm just not looking for a lot of action on the short side. And if I miss a short, I don't care, because I think the action is going to be on the long side. Well, MEJT said this move was false, it retraced, said this move was false, that retraced. Now says this move in the afternoon is false, gives us the target of undercutting this low, 59.65.09. So that's what the system says. I'll have to go with it if we don't gap up smartly. We have other things corroborating negative stuff. We have a pattern which is usually positive, which isn't. Could all change if we gap up here tomorrow, but that hasn't happened yet. We have sentiment indicators on the verge of giving a sell signal. People are buying too many calls in relation to puts, and I don't have today's figures yet, so it might have already triggered. Well, why am I calling this a pattern with the early low? It sure looks like an early high, midday rally, late low. Well, if this were all I have, I wouldn't be able to call it. But it also fits the early low pattern, and I'm going to go over why I'm calling it that. The pattern calls for an early low, a midday drop, and a late high. And the early low typically splits. If you take the average of these two figures, you get a low at the normal time. It's extremely common for this split low to be 2 hours apart, with one low coming at the open and one low coming at exactly 2 hours of trading, but that's common. It doesn't have to happen every time. So we have this low on time, we have this drop on time, we have this high on time. What we don't have is the normal shape, and the normal shape doesn't really mean anything. So how do we know it's not the pattern with the early high? Well, a long time ago, someone else figured out that these patterns repeat every 32 days. So this was 32 days ago. I mean, it's either 32 days or a multiple of 32 days. And those are calendar days. You know, sometimes it falls on the weekend. Just have to go back another 32 calendar days. You get an early low here, which you'll see here is split. Take the average, that's the early low, a rally, a late day rally. Here's your drop in the middle of the day. Late day rally. It should close at the high of day, but it doesn't. But next day's open can substitute for the prior day's close. So that's the normal pattern. The way you can prove it is the next day should have a low at the bottom of the first hour, which it did. And then the following day, these are all calendar days. If it's a weekend, you just can't say. Following calendar day should be a rally day with a high near the close or a straight line drop. So that's one example of this pattern. Let's look at some other days. Well, it's the same thing. There's an early low, there's a midday drop, and then a close near the high of the day. Next day, the key is it has a low at the bottom of the first hour. And then the following day should be a rally day. If it isn't a rally into the close, there's a straight line drop. So that worked again. We just keep going back every 32 days. You have an early low, midday drop, rally into the high. Here's your low at the bottom of the first hour, give or take a little. And the following day is a rally into the close or a straight line drop. And you keep going back every 32 calendar days, and the pattern keeps on repeating. Here's your normal early low, late day pullback, and then rally into the close. The key is the next day is a low at the bottom of the first hour of trading. If I'm right about this, and I think I am, tomorrow at the bottom of the first hour of trading, give or take a little, it's going to be a low. And if I'm wrong, it'll be a high. So let's check. Following day rallies into the close or a straight line drop. We can keep going as many times as you want. Well, here's your early low, your late high. Here's your drop in the middle of the day. It's a negative pattern. When it's negative, you see more negativity. And the following day, there's no rally into the close, but there's a straight line drop. Keeps on repeating all the time. I mean, it makes no difference how far back you're going to go. I mean, you have an early low, midday pull back, and then rally into the close. Key is the bottom of the first hour tomorrow, give or take a little, there should be a low. Then, of course, the following day, here's your straight line drop. So you can just do this yourself. You can go to timeanddate.com and go back every 32 calendar days. And I've done that when someone taught me about this, and it works. Kind of one of the most amazing things I've ever seen. Now, the shape isn't always the shape you want. I mean, this is a day that's usually a rally day, and this clearly isn't. Now, we could gap up here tomorrow and get your normal shape, and then fine. But if we don't, lower prices are the print. Just remember, it's the times that count, not the shape. And we have the low where it belongs, the high where it belongs, and the midday drop where it belongs, and that's all that counts. And the proof is the bottom of the first hour tomorrow should be a low. Okay, tomorrow's pattern has the early low regardless of where we open. There's a lower MEJT target. Unless we gap up smartly, the rules call for it to print. Today's normally bullish day didn't close near the high, and if that's maintained at the open, now we don't know yet, should lead to lower prices printing regardless of where we close. I'm really reluctant to go short when we're this early when I'm calling a wave 3 up a multiple degree. But unless we gap up and ideally overtake today's high early, we should see lower prices tomorrow. It's not a guarantee that we close lower, but this is a negative pattern. We do have the target. I think it's likely to print. I'm just waiting for places to go long, not places to go short. I would love for 59.13 and change to print. I'm just not confident it will, but if it does, I'm going to be buying. So tomorrow has a really low, even though this doesn't look like it. If you don't believe me, you can see if we make a low at the bottom of the first hour of trading. And we have a lower target, and that's today's call.